Uganda shilling has continued to decline.
Every 2 months, the Bank of Uganda governor announces a policy interest rate called central bank rate to clearly signal the monetary policy stance going forward, in line with the bank mission to foster price stability and a sound financial system.
The Bank of Uganda will raise the CBR rate by 1.5 percentage points to 14.5% immediately.
The bank pursues this mission through formulating policies that have helped mitigate systemic risks to the Ugandan financial system, issuing currency, protecting the financial sector from potential financial shocks and risks through consistent surveillance, ensuring a sound financial sector by supervising and regulating financial institutions, overseeing the foreign exchange sector, promoting a sound economy through advising government on the financial sector, serving as a bank for commercial banks and the government. On the 15th of August 2016, Bank of Uganda made 50 years. The celebrations to mark this milestone, which were presided over by President Museveni, were held on the 3rd of August 2016 at Serena Hotel.
Happy birthday to the Bank of Uganda.
For the 50 years of Bank of Uganda, and I wish you good luck.
Happy 50th anniversary.
50 years is not a short time, so nice jubilee.
Looking back at the difficulties and tough times through which the bank has persevered, one cannot help but appreciate the spirit in which these congratulatory messages have been given.
One of the key challenges which government was facing and which Uganda was facing was the amount of external debts which the government we had incurred. I think it had amounted to about $3 billion.
We also went through wars, 1979 and 1986, which also became a challenge, especially with our country centers.
Challenges notwithstanding, Bank of Uganda has succeeded in delivering on its mandate to build, maintain and develop Uganda's financial sector.
The economy is running normally. There's a bit of inflation from time to time, but it's under control.
This documentary highlights the 50-year Bank of Uganda journey. Bank of Uganda was officially inaugurated on the 15th of August 1966, when President Dr. Milton Obote laid a foundation stone for its permanent headquarters. Government had ambitiously but determinedly set to start a national central bank following the aborted efforts to set up an East African central bank.
An official of the De La Rue company intentionally leaked to me as the secretary of the Ugandan task force that I have already struck a deal to have the contract for Bank of Tanzania. So I took a cue and telephoned to Frank Kalimuro, who was the secretary to the cabinet. I narrated to him what I had heard. Our task force was asked to do two things: to continue attending the preparatory committee work, at the same time quietly prepare work for the committee which was now being formed now for Bank of Uganda establishment. So side by side, arrangements were being made to ask Bank of England to send officials to come quietly to work within Uganda.
In November 1965, Mr. Lewis arrived with the responsibility of drafting the Bank of Uganda legislation, recruiting and training staff, modifying Liverpool House to suit currency centre needs, and arranging for shipping and storage of the new currency. He was joined by Mr. Anthony Parker, who became the country's first exchange manager, and George Palmer Lambie, who assumed the role of general manager. The three played an instrumental role in setting up the bank's internal structures. Joseph Mubiru was appointed the first governor, Bank of Uganda.
For all of us who were working, we knew Ian Lewis was going to be the first governor. But the young politicians then were trying to push that with independence coming, there was no need to continue bringing colonials to those top positions. That was the political thinking then.
A seminarian from a highly religious family, who initially studied philosophy with the intentions of becoming a priest, Joseph Mubiru had first worked as a bank clerk before going to India for further studies. Mubiru was appointed Assistant Secretary to the committee that formed Africa Development Bank. He completed the task and returned to Uganda, where he got appointed as head of the newly founded Uganda Credit and Savings Bank that later became Uganda Commercial Bank. He took time off his busy schedule at UCB to chair the committee that drafted the bank statute. As the institution charged with issuing and protecting the country's national currency, Bank of Uganda set off with the task of converting the existing East African Currency Board currency into Uganda's new national currency. This was a milestone considering the journey to getting a national currency that started with barter trade.
Towards the end of barter trade, the East African region experienced the beginning of the building of the East African Railway. That's about 1896. Now, most of the workers on the Uganda Railway were from India, and they used to be paid in the rupee. Now, the rupee used to work side by side with the cowrie shells, but the rupee became so popular, and that's why in Uganda you have words like rupiah. Now, however, the rupee became so counterfeited. The Imperial British East African Company, IBECO, came up with an East African rupee. In 1966, the month of August, we had the first Bank of Uganda series, which are displayed here.
One East African coin was exchanged at an equal rate of 1 Uganda shilling. The currency notes were 5, 10, 20, 50 and 100 shillings, as well as coins. Hardly a year into its establishment, the bank found itself faced with the challenge of devaluation of the pound.
The pound had been devalued. On Monday, after the announcement...
On Monday, 18th of November 1967, the British government announced its intention to devalue the pound sterling. Devaluation of the pound had serious implications on Uganda, considering the country's reserves were in pounds. However, for a constitutionalizing body, Bank of Uganda, together with the other two East African countries, including Kenya and Tanzania, ably rose to the challenge. The nurturing institution was put to yet another test following President Milton Obote's Nachivubo Declaration.
The owners of these companies have in the main no stake in this country, and therefore the profits that are made by such companies are usually repatriated to various countries in the world.
It caused shock waves in the economy. That move to the west, to the east, said government was taking over 60% of the shares of those private sector companies, and that included the commercial banks.
This development also served to make Obote's government unpopular, another problem for Bank of Uganda in terms of aid mobilization and international networking.
And Uganda is ours.
It will be in this building that the contribution of the Bank of Uganda to the exciting endeavors of the years to come will be made.
Despite the economic constraints and political upheavals, Bank of Uganda managed to complete construction of its permanent home along Kampala Road, where the bank is housed today. The bank soon fell victim to the political crisis when in March 1970, Governor Mubiru was placed under house arrest on allegations of being part of the team that organized President Obote's attempted assassination in December 1969 during a UPC delegates conference. There was no evidence connecting him to the assassination, and he returned to his office on the 23rd of March. He managed to keep Obote off his back for about a year until his government was overthrown by Idi Amin in a military coup on the 25th of January 1971. In October 1972, a year after he had left Bank of Uganda, Mubiru was picked from his Impala House offices along Kimathi Avenue and was whisked away, never to be seen again. Mubiru left a big gap for Bank of Uganda and the banking industry the world over, but the roots he planted live long after him. It is in recognition of this very important contribution that, in 1988, Bank of Uganda introduced the Joseph Mubiru Memorial Lecture. The lecture is held annually, discussing economic financial topics by leading personalities in the financial sector.
Many outside of Africa.
Chiinji Semiano replaced Governor Mubiru. In spite of stepping into big shoes, his experience and training qualified him. He, however, joined the bank when the country was economically strained and the country's exports had declined by 9%, while imports had risen by 20%. This economic strain was further compounded by the global monetary crisis, which saw America's President Nixon de-link the United States dollar from gold. This constrained the bleeding economy further, considering 3 years earlier, Uganda had transferred a sizable percentage of her reserve to the dollar. Making matters worse for Chiinji's term of office, on the 8th of August 1972, hardly a year into his governorship, President Amin expelled Asians and other foreigners deemed to be exploiting Uganda's economy.
One evening, Amin was in Maroto, and he said he had received a dream that in order to develop Uganda, he must get rid of these people.
Bank of Uganda found itself directly involved in the overwhelming expulsion exercise in order to meet their exit deadline that President Amin had set. Mrs. Janet Kahirimbanyi, who was undergoing internship at the time, came face to face with the consequences.
They were supposed to declare what they have. On their forms, they would declare how much money they have left, put their bank statement if the money was in the bank, and you give out of that, you give them equivalent of 1,000 shillings. Probably the challenge we had was because we had to get many other people from other government departments and ministries to assist us, because you would have a queue lining from the front of the bank down to KPC, or long queues. There were many.
Amin's decree seems to have been a populist move informed by prevailing sentiments from some sections of society.
There were people who were accusing them of they benefiting more than the Ugandans in terms of foreign exchange, and that they were not readily employing Ugandans.
The celebrations were short-lived. People were to soon realize the decree was instead serving to disintegrate the entire economic structure, some effects of which the country still experiences.
The people who were managing production were expelled from the country.
The business community changed overnight from the Asian community to anybody.
Production simply plummeted.
The international isolation of Uganda for an already dislocated economy also hindered Uganda's participation in international markets due to a shortage of required supplies resulting from a lack of foreign exchange.
When he kicked out the Asians, the British were not amused. When he kicked out the Israelis, the boycott came in. We had to pay cash for imports. And that is not good for the economy.
Mrs. Sarah Odong, now retired, was at the time in charge of the visible section of exchange control, and she shares the nightmare the bank experienced managing foreign exchange during those difficult times.
We would have to look at each and every applications to satisfy ourselves that the application number one was genuine and authentic, and also that there was foreign exchange to service that particular application. So the pressure because of that, and a business community which had just come into business overnight without any knowledge of how to run business, was quite a challenge, especially when some of those were not only high-ranking, but sometimes even from the armed forces.
Chingy's disapproval of the Asian expulsion and the deficit he inherited amidst continuing challenges did not favor him in the eyes of Amin. He was succeeded by Onegi Obel in August 1973.
Onegi Obel was very tough on Idi Amin's soldiers, and he would not allow people, Amin soldiers, to walk in the bank and just arrest people like that.
The country had been isolated and therefore had no foreign exchange, limiting the bank's activities to serving as a forex bureau. Everyone from minister to soldiers to government officials were going to the bank in search of foreign exchange.
Certain times it was thought that foreign exchange was an officer at the bank.
I remember when Idi Amin's soldiers were looking for Mr. Foreign Exchange, and they moved to look for they were tired of that man, so they came with guns to the central bank.
And then when the authorities were told, they said, if it's an office, let's dismiss this Mr. Foreign Exchange, who is never at the office.
I think it was one man who said, I think, was it Teresa Chikonyoko who said, please, put out, I think, a pound, a note of a pound. I said, this is foreign exchange, is not foreign exchange.
When it was explained that actually foreign exchange was the foreign currency which we used to import goods, they felt that this could be done away with, and we start importing with our Uganda shillings. But simple as that. It's another type of economics.
In 1978, Onegi Obel was replaced by Honorable Henry Kajura.
Initially, he appointed me to be managing director, chairman and managing director of Uganda Commercial Bank. And Onegi Obel was appointed governor of the bank. I think Onegi Obel fell ill. So Amin said, well, why don't you go to the central bank? Well, it was very difficult for me to refuse.
Amin is also hailed for being enterprising in the difficult times when the West had isolated Uganda. He befriended Islamic countries who came in handy by providing the much-needed financial support.
I wanted to be very friendly to entire world community.
He went and told the people, particularly the Islamic world, that Uganda was a Muslim country. So some of these grants we're getting, they were just grants, not loans.
The international coffee crisis also helped Uganda earn some income.
That's why Amin was able to start these big projects, the airline, of the satellite, and so on.
In April 1979, Amin's government was overthrown with the help of Tanzanian forces. The new Uganda National Liberation Front, UNLF government, appointed a new governor, Gideon Nkojo. Nkojo is a Ugandan who had been working for the World Bank in Washington since the 1960s. During his short term in office, Governor Nkojo is mostly credited for wooing back cooperation and partnership of the international community, particularly the International Monetary Fund and the World Bank. This is a task he handled excellently given his experience and international networks. The continuous political disruptions made it impossible to realize any plans.
When he found that there was a bit of confusion about the elections during 1980, he thought this was the time for him to leave. So he left. He went back to the World Bank. And then I took over and I was appointed governor after about 2 or 3 months.
At the time of his confirmation, Bank of Uganda was actively engaged in combating the effects of a shattered economy.
We inherited a huge amount of inflation. Prices in 79, 80 had risen by about 200%.
The newly reinstalled UPC government had promised to put the economy back on its feet. Government was so committed to this pursuit that President Obote assumed the office of Minister of Finance, something that had not happened before.
They tried to put that credit together such that it would help the farmer who would not easily access the import market. The equipment was here and wanted the loan, and they would give him the equipment.
The bank's commitment also made government more cooperative, given that management and staff applied all within their capabilities to revamp the economy. President Obote freed the shilling during the 1981-1982 budget reading on the 1st of June 1981. The decision to free the market was commended locally and internationally. The monetary modifications also brought on board a dual exchange system, which was developed with patriotic sentiments of cushioning some sectors.
That dual exchange rate gave a preferential exchange rate to priority imports like petroleum and government debt. And then all the others, the consumer, were able to import consumer goods at the market-determined rate.
Overall, the country started experiencing progress towards economic recovery.
Because of the standby credits that we got from the IMF, we were able to manage that huge budget deficit during that time. And by about 84, the budget deficit had reduced to about 35% from about 75% of total expenditure.
Now, although during that regime of Obote, the economy was beginning to stabilize. The government of Obote was at the same time facing a war. Here in Uganda, near Kampala, it is not easy, to stabilize an economy when you are facing a war like that one.
The issue of whether Lule wants to be president, Benaisa wants to be president, who else?
On the 27th of July 1985, President Milton Obote was overthrown by his generals Tito Okello Lutwa and Basilio Okello. In August 1985, Governor Chibirango was summoned to Parliament building to discuss with the general actions he wanted to take, as well as providing him with some information. The issue of currency change was also a key matter.
We knew that it was not justified to change the currency, but I think what they wanted is to get their portrait in the currency notes. We tried to resist that, and we resisted it as much as possible.
On the 26th of January 1986, the National Resistance Army announced a takeover of government. The new government promised to restore peace, good governance and democracy, but even more urgently committed to transforming the national economy, which had been shattered. To achieve this vision of economic transformation, Dr. Sulaiman Chigundu, who had been a don at Makerere University, was appointed governor. Chigundu's first day in office coincided with the first visit of the International Monetary Fund team to Uganda since NRM's takeover of government. Initially, the NRM government had been opposed to the international domineering of the economy and had preferred to isolate them. However, after nearly a year in government, the reality hit that if indeed their economic recovery vision was to be realized, they needed the international community.
The president was reluctant, but because of the situation, because these were terms, he said, if you want us to help you rebuild the economy, if you want us to do these special programs for you, you have to do this.
They were the biggest lenders for our budget. And of course the economy itself, we could not tax sufficiently to be able to do what you want to do.
First of all, it was more a question of stabilizing a patient who was in a coma. The economy was in a coma and we were attempting to bring it back to life.
With full awareness of the financial crisis Uganda was experiencing, the Bank of Uganda team ably negotiated with the IMF officials areas of concern, including the large budget deficit, which was being financed in ways that accelerated inflation and currency depreciation.
Minister of Defense would need Uganda shillings at a moment's notice. And even the Bank of Uganda would not have, sometimes had problems raising the money they needed. They need the sacks and sacks.
We had very little revenue, so what we did was to print money. We were printing money at every stage.
Making matters worse, even coffee, which was cushioning the economy, had come under threat and was not able to contribute to the economy.
Coffee Marketing Board had borrowed heavily, could not repay banks. So when the time came around Christmas, the banks refused to lend more money to Coffee Marketing Board to buy coffee. What was a coffee problem became a political problem.
To add fire to injury, debtors were on the government's heels demanding pay.
We had to seek technical assistance from the World Bank, IMF, to get us an advisor on external debt management. And we were able to create a new department immediately. It's called EDMO, External Debt Management Office.
With a clear picture of the external debt, which in 1987 stood at $1.4 million, government was able to come up with a strategy to negotiate for cheap loan advancements, discounts, and waiving of some of the debts.
So there was a decision that we should, first of all, carry out a debt audit to understand who our external creditors were, the lenders, and reconcile them.
We offered at that time 12 cents for every dollar for commercial debt. Take it all, we shall never pay you. And for the non-commercial debt, we negotiated a concession and grants to finance the debt.
Given the goodwill of the new government and the international community, because we had open relations with the IMF and the World Bank, we got support from the Paris Club.
So it was a combination of a number of measures that took place, on which later on culminated in HIPC 1 and HIPC 2, which debt was, mainly the official debt was cancelled.
Finally, the first disbursement of the long-awaited support from the International Monetary Fund was advanced. Bank of Uganda was mandated to oversee and ensure that it was put to good use.
We went through the discussions and we agreed that that money was going to be used for funding raw materials required to produce products which were being used by the common man.
The support had conditions attached that government had agreed to observe. In the economic package agreed upon between the government of Uganda, the World Bank and the IMF, demonetization of the currency to reduce liquidity was a key element.
Obote had already decided on a currency reform, and the details had already been made by the governor and the Bank of Uganda team which were there at that time. So when the new government comes in, it was decided to continue.
In May 1987, the exercise was conducted.
The new currency was going to be introduced by removing 2 zeros. But even with that done, the money supply level was still very high. We came to the idea of even a 30% tax.
The 30% conversion tax from the old to new currency fetched Uganda over 300 billion shillings. The saved money was to help pay 0.7 billion shillings that the currency reform exercise cost the country, clear at least 30% of the outstanding debts that government owed Bank of Uganda from previous overspending, and the balance to help start a development fund. Uganda also had to comply with opening the forex exchange market. The 1964 Foreign Exchange Control Act provided that all foreign currencies brought into the country be surrendered to government within 48 hours. The central bank was put in charge of managing this exercise. Like previous governments, NRM experienced forex management challenges to a point of running out of forex.
One time we had a case of somebody, I won't say who, he had tons of coffee for export, but he had to pack it and he needed packaging materials. So he applied for foreign exchange and the system did not allocate it. Now, I think he wanted about $30,000 to import packing materials to export tea that would earn the country about $300,000. So you can see the problem involved in the control and exchange controls. Sometime in 1990, it was decided that the central bank and government cease setting exchange controls, that people could buy and sell foreign exchange through forex bureaus. And what was enacted, I think, is the Foreign Exchange Bureau Order, which actually liberalized the foreign exchange market.
The country continues to operate under a free forex exchange market arrangement. Opening the Mbarara branch is a milestone that the bank set to achieve 6 years earlier. In 1984, the board of directors decided on opening branches in the respective regions as a way of taking central bank services closer to the people.
As I speak now, we have 10 banks, commercial banks in Gulu, and they have spread out to the nearby districts. So this center makes it easy for these banks to meet their liquidity needs.
To date, there are 8 regional currency centers including Gulu, Masaka, Jinja, Mbale, Kabale, Mbarara, Fort Portal and Arua. The centers are opened based either on the vibrancy of economic activity in the area or regional coverage that can be reached. As the centers take services nearer to the people, Bank of Uganda continuously designs packages to make them more efficient through empowering its personnel and ensuring coordinated activities. The now retired Naomi Nasasira is one of the directors who revolutionized the department.
Some of them became regional branches and some of them became currency centers. Now those which became regional branches, like Jinja, like Mbale, like Mbarara, like Gulu, now became divisions.
The 90s also saw Bank of Uganda hit an important milestone of becoming an autonomous institution.
The minister was a licensing authority of all these banks. They would license banks, the UCBs, the cooperative bank, and pass them over to Bank of Uganda to supervise. Of course, you cannot supervise an institution you have not licensed. So they came with their own baggage. So in 1993, the powers of the minister to license were brought into Bank of Uganda.
This independence has helped Bank of Uganda to realize its mandate of promoting financial and price stability.
I would say the central bank has managed the financial sector and monetary policy better than we usually do.
Part of the economic reforms to revitalize the economy included privatization. Probably, no other entity caused controversy and brought attention to the privatization process like the sale of Uganda Commercial Bank. Seen as an independent symbol, the government and Bank of Uganda came under attack from the masses and politicians when a decision was made to privatize it.
Contrary to beliefs by many people that was not a profitable bank, it was a profitable bank from the time it was created until the war of 1978, 79, when Tanzania came in and they bombed their buildings in Masaka. And as a result, those buildings had to be written off on the books. And when they did that, this created a loss. So it was the first time that they actually ran at a loss. But after that year, they continued to run at a profit. And in 1987, I think that's when Frank Mwine came in.
The management under the late Mwine decided to open many branches.
Up to 189 branches. From about 60 branches.
Without any injection of capital or new funding to finance the opening of those branches. So UCB was basically opening branches using depositors' funds.
We started to see UCB failing to meet its obligations to depositors. It had a liquidity crisis. And when a diagnostic study was made, it was found that it was quote unquote technically insolvent. And so the World Bank and IMF recommended that it should be sold, should be privatized.
There were efforts to redeem the institution, but the expansionist ambitions, which sought to establish Uganda Commercial Bank branches countrywide, served to destroy it.
So when depositors went for their funds, very many times UCB came here to borrow money from Bank of Uganda so that they could actually fund depositors. And we had several meetings with the UCB management, but it took quite a bit of time for them to accept that what they were doing was not the right thing.
In further pursuance of protecting the institution, Dr. Ezra Suruma, who was the Deputy Governor of Bank of Uganda, resigned and went to Uganda Commercial Bank to help steer it back to its feet.
I took drastic measures. I closed a huge number of branches. I think I brought the branches down to 89 from 169. And there were more than 3,000 workers. I believe I dismissed at least 1,000, maybe more, and gave them attractive retirement packages, so many of them left voluntarily. We were able to make the bank operationally profitable, turn it around. Unfortunately, after we turned it around, the World Bank said it will now fetch a better price when it is sold, and that was heartbreaking for me.
Hardly had the storm over the sale of UCB settled than a new controversy of Greenland Bank, which was owned by Dr. Sulaiman Chigundu, arose.
The bank had gone beyond. Initially, when the central bank put in the 33 billion, we thought that damage was up to that level. But they discovered that it was the money which had been brought on fixed deposits by almost 16 companies and which had not been shown in the books. And the companies wanted their money was far beyond which could be done.
Bank of Uganda's failure to identify the problems before the extreme action of closure fetched a lot of supervision competency criticism.
The supervision did play its role. They looked at these institutions and they saw the problems which they had. These banks were warned. They were requested to rectify what was not going right. Insider lending, insider abuse, customers' funds were being used to finance people or companies which were related to the shareholders or directors in those companies.
The action of closing the bank brought fears people would lose confidence in the banking sector. However, Bank of Uganda ably took charge and rescued the situation, especially in light of the fact that depositors were compensated.
In this particular case, government came in and provided additional resources for the compensation of all depositors in the 4 failed banks.
For weeks, depositors lined up at the central bank to get paid. This helped restore confidence in the sector. On the other hand, the bank went out to explain to the public the fact that the bank closure sought to protect the depositors and the entire banking sector.
I sent people on the radio stations. We had a media interview with newspapers, with everybody else.
The bank also moved to protect commercial banks from bad borrowers by introducing the Credit Reference Bureau concept.
If a person goes to a bank and wants to get credit, you are given a financial card. A financial card identifies you. It has your picture, it has your fingerprints, and that's you as a borrower. And once you get a loan, that information is electronically transmitted to a Credit Reference Bureau. A Credit Reference Bureau has been a very good innovation because it has eliminated multiple borrowing.
These actions helped set the banking sector back on its feet, which boosted government's confidence to remove the moratorium. Removal of the moratorium saw a number of banks the world over flock to the country to open up branches. To date, the industry boasts of 25 banks, although some critics expressed concern that they have not reached the rural areas. In 1996, Bank of Uganda moved to include low-income earners by developing a package that could meet their needs. Microfinance institutions that were catering to small-scale savers and borrowers were brought into the regulatory fold of Bank of Uganda, making sure their deposits would also be protected.
Mobile money has been, Amin pointed out, as one of those key ones, but then there are others, such as credit cards, debit cards. Now all these fall in that bracket of instruments that will increase financial inclusion.
In spite of the gains made in securing financial inclusion, high interest rates persist, and inasmuch as some reductions have been made, they are not yet favorable for competitive business.
Our lending rates are between 18 and 24%. And when you look at average inflation over the last 10 years, you're looking at numbers which are 6-7%. So we have almost real interest rates which are in double digit, about 14-15%.
The bank recognizes a need to have the rates lowered, but if that is to be realized, it will take much more than Bank of Uganda's supervisory intervention.
We need to increase the mobilization of medium long-term resources. We have the very unfortunate situation where medium long-term resources are mainly at the moment concentrated in the National Social Security Fund. Very little competition in terms of mobilizing those medium long-term resources.
In order to increase capitalization and access to equity, Bank of Uganda introduced the capital markets to the Ugandan financial sector. Simon Rutega, an official at Bank of Uganda, was assigned the task of kickstarting it.
The first step was to establish the legal framework for the industry, which resulted in the Capital Markets Authority in 1996. And then in 1998, I came in to establish the stock exchange.
The bank's innovativeness, perseverance and commitment has seen the bank steer the financial sector to the secure, stable and sound economy it is today.
As the economy has developed and the financial system has deepened, the bank has strengthened its monetary policy framework using a publicly announced policy rate, which is called the central bank rate.
In 2000, Professor Mutebile was appointed the governor of Bank of Uganda. His reign, which has been renewed 3 times, has majorly focused on stability, stability, and stability. The price stability era has experienced 2 regimes. Between 1993 to July 2011, the bank operated with a monetary targeting approach which set a percentage that money needed to grow at and worked to that realization. However, this approach was constrained by the fact that it observed money in circulation and sought to control it, a task the bank realized was difficult due to a number of factors.
You see ATMs coming on board, you see mobile money coming on board, you see increased trade with between Uganda and its neighboring countries also coming on board. All those have contributed to destabilizing these relationships that underpinned the quantity framework.
In 2011, the bank adopted inflation targeting light framework.
You saw that inflation at least capped at 8.5% and started declining. So that means that actually the new framework was working because it was it was working on something that is far ahead of what even other economic agents were not seeing. Because if you are tightening monetary policy when inflation is at 2.7, 2.9, it automatically means that you must be so brave to do something like that when there is no inflation.
Nonetheless, the bank is conscious of and responsive to other price movements. Through the Financial Markets Department, for instance, Bank of Uganda ensures price stability by intervening in the foreign exchange markets.
When the currency, Uganda shilling, is depreciating very fast, you need resources to sell into the market so as to be able to stabilize the Uganda shilling dollar exchange rate. So we hold a significant amount of foreign exchange reserves to be able to meet this requirement.
Although government closed the development fund in 2009, it supports the agricultural sector through the Agricultural Credit Facility.
We have so far financed 334 projects across the country. We have so far disbursed over 200 billion in total to farmers and agro-processors, and we still have a lot of money in stock.
These innovations have been realized due to the professionalism and commitment of the bank staff that persevered through hard times, learned to improvise and developed mechanisms that not only responded to challenges but helped develop the sector.
When we started automation, you got instructions in a paper-based form, but you transferred the value using an automated system, which then means that that transaction then flows straight through the technical infrastructure from the owner of the funds to the beneficiary without manual intervention by bank staff. So what do the bank staff then do? They monitor these flows. But you've taken care of the security and you've taken care of the efficiency.
Bank of Uganda has continuously developed mechanisms that place it in a better position to play its supervisory role effectively by, amongst other things, looking at the entire financial sector.
What we do is to, first of all, to monitor the performance of the financial system as a whole. Where are the risks likely to come from? Is it from the banking system? Is it from insurance? The second, once you have been able to monitor and identify risks, is to propose policies to tackle those risks. So in our area, we deal with what is called macroprudential policy tools. So that's a new layer of tools that has come to the Bank of Uganda, which didn't exist before the Financial Stability Department.
Whereas the aspiration to form an East African central bank was not realized in the 1960s, like other East African central banks, Bank of Uganda's journey in the past 50 years has provided the necessary experience and skills that will enhance the establishment of the proposed East African Central Bank.
Inflation, we are okay. Fiscal deficit, we are off because our fiscal deficit is 6 now. Our reserve cover is 4.4 months of income, imports. We are at 4.4, the target is 4.5, so we are close. So public debt, we are far below 50%. So Uganda actually, among the 6 countries, Uganda is the star.
The East African member states have made progress towards establishing an East African Central Bank. In May 2016, they signed the protocol establishing the East African Monetary Institute to monitor all the aspects of development within the region. The Central Bank of the future seeks a more public participatory approach by empowering the population with information that helps them make informed decisions.
For a long time, communication coming from the central bank is steeped in jargon and therefore not very accessible to people who read it and are not extremely well grounded in issues of economics and finance. So we are making deliberate efforts and we're in the process of simplifying our ongoing communication. We are finding that there are different ways of doing it in terms of visuals, in terms of direct engagement with audiences, but also in terms of creating tools that can be self-service tools like a glossary of terms, like creating ready-made videos on different topical elements. I'll tell you that one of the things that we are doing right now is creating products for the digital space.
As it steps into the future, Bank of Uganda stays reaffirmed in its commitment to serve Uganda, with the boldness of an institution hardened by the tough times it experienced, made wiser by the experience it acquired, and alert to the challenges that lie ahead. Bank of Uganda for a stable, sound, and vibrant financial system.